Okay, what's up, Crypto Empire Builders? Okay, so today we're going to be going over Bitcoin and seeing where we at. So, it's a lot of big news.
We have been expecting institutions to start moving into Bitcoin.
That new record brings the cryptocurrency's gains in the past 6 weeks to about 70%. Analysts are pointing to some more interest from Wall Street and momentum building after Tesla said it was adding Bitcoin.
If you buy some Bitcoin, you will further diversify your portfolio and increase your returns with lower risk. We do believe that Bitcoin is getting ready for institutional. Are we in a bubble? I do not believe so. And I am very happy that many people are worrying.
So, again, some more big news on Bitcoin. They got BlockFi letting everybody know that they're about to drop an IPO soon, and Coinbase is about to drop their IPO pretty soon. So we're going to see how the market looking. And right now we can see it looks like we're going on to another trend. All right. So if we let's take from that previous to the previous low. And I think 65,000 is definitely a reach for us. Will be the next pump. I'll definitely put me a trade in once we get at 60,000. I'll definitely put one in on Bybit. Guys, make sure y'all hit the links that we got below where you get the best deals on cryptocurrency with Bybit, and I got Celsius there. It's everything. BlockFi, the VPN, everything you need for your setup. And I have a class that I have, one of my first videos. You guys can take a look at it. Make sure you subscribe so you can get some new information, because I'm going to be bringing y'all some hot coins coming up real soon. So here we got Bitcoin's at 59.4, and it looks like it's bullish right now. We see the lowest low was about 57,000, and the last one was about 54. So in here we got a low here at 58. So it's looking bullish right now. This may be the beginning of the big pump, and hopefully it goes to 75. Okay, but a lot of people are topping out saying that Bitcoin will make about between 175 to 250,000. That's what they're predicting. You guys let me know what you predict on where you think Bitcoin will end at by the end of the year. Okay, and let's take a look at Cardano. Okay, so let's go at Cardano. Cardano kind of took a little pump and dump the other day. As we can see here, you see that huge from 145 to 126. Actually got all the way down to 122. And then you see that pump of green, and then we see we're back at like 131. So I think with Cardano, every time Bitcoin is coming down or is staying in consolidation, it seems to go up. And once Bitcoin actually make a move up, it seems like Cardano makes a move down. So just the trend that I've been taking a look at, that I've been seeing. Now let's take a look at Ethereum, okay? See where we at with Ethereum. Okay, I actually just traded some Ethereum over on BlockFi from Ethereum to Bitcoin, because BlockFi is giving 0.4% until March 31st on every trade that you make. So I've been like, hey, if I see a good deal out there now, I'm going to put it through BlockFi because they're giving this 0.4% in Bitcoin. So that's a new thing. You guys make sure you sign up for BlockFi. So if we see, wow, Ethereum looks very bullish right now. We see that it had that low of about 17.57. All right, and where is this gonna go? I said last time my prediction was definitely that it would be 19, but let's see from this bar here where we're projected to go. So this push will put us to about 2,000, which is nice. I was expecting Ethereum to push a lot more. It hasn't, but maybe because of these NFTs, we'll be seeing a lot more. All right, guys. So let me know what you think about where you think Bitcoin is going. Make sure you get the link so you can save money on trades. Right now, Binance is the best one to buy from. Coinbase is high, and trading is Bybit and Femic. So you got to stay aware of the lowest fees to do trades and everything. So great invest in crypto, gang. Make sure you guys be safe. So again, some more big news on Bitcoin. They got BlockFi letting everybody know that they're about to drop an IPO soon, and Coinbase is about to drop their IPO pretty soon. So we're going to see how the market looking. And right now we can see it looks like we're going on to another trend. All right. So if we let's take from that previous to the previous low, and I think 65,000 is definitely a reach for us. Will be the next pump. I'll definitely put me a trade in once we get at 60,000. I'll definitely put one in on Bybit. Guys, make sure y'all hit the links that we got below where you get the best deals on cryptocurrency with Bybit, and I got Celsius there. It's everything. BlockFi, VPN, everything you need for your setup. And I have a class that I have, one of my first videos. You guys can take a look at it. Make sure you subscribe. So
we believe that the institutional behavior and moves recently have been fascinating. We have been expecting institutions to start moving into Bitcoin and other crypto assets, but primarily Bitcoin, the most secure of the blockchains, because if you look at the correlation of Bitcoin's performance relative to any other asset class, it has the lowest correlation, meaning if you buy some Bitcoin, you will further diversify your portfolio and increase your returns with lower risk, right? So that's why institutions look for that low correlation. Bitcoin has it. And so that's clear. We have 10 years of history now. But what surprised me and us generally was to watch MicroStrategy, which has put all the cash on its balance sheet into Bitcoin, and even did another equity offering so it could put more cash on its balance sheet. And I think that's a little crazy, because I think the regulators will have something to say about this in terms of what is this? Is this company the MicroStrategy technology company, or is it like an ETF? So we don't know about that. But then you saw Square put 1% of all of its assets in Bitcoin. And I think you're going to see more of that. We didn't expect that. What we did expect was, because of the low correlation of returns, institutional investors to move in. The most surprising one to me thus far has been MassMutual. It put $100 million into its general account. Now, its general account is enormous. So $100 million is something like 0.001. But what that move told us is, MassMutual is very conservative and very highly regulated. And so it had to jump through many more regulatory hurdles than I thought would have been possible by now. So I think that is a seal of approval. And then, of course, you have the institutional infrastructure moving into place, whether it's with custody, and everyone knows a lot about Fidelity being out there in terms of wanting to custody Bitcoin in particular. You have the Intercontinental Exchange, and you've got the CME now with Bitcoin futures, one settling in kind, one settling in cash. And so we do believe that Bitcoin is getting ready for institutional. We have a very disciplined process. And so our minimum hurdle rate of return for a stock to enter the portfolio is 15% at a compound annual rate over 5 years. We expect the stocks in our portfolio to double over the next 5 years. Now, when you have big runs, as we did last year, a lot of stocks drop below that 15% as a 5-year expectation. And so when they drop into the 10 to 15%, we'll be taking profits. So we are selling, if they're core to our platforms, then we will probably sell, if we think it's gotten way out of hand, we'll sell it down to 50 basis points. We've gone from 10% to 50 basis points in stocks and exiting some as well. Even if they are core, we just think, okay, they're going to need a long time to grow into this valuation. And we don't want to live with or sit with dead money. But then we will get corrections like the coronavirus, right? And what we do during a correction, we will have sold stocks that are core. For example, 2U and Teladoc are they were in both our next generation internet portfolio and our flagship before the coronavirus. Both of them benefited from stay at home. They started moving up as other of our stocks were crashing. They moved up to such a point, they dropped below the 15% as these others were giving us opportunities to deliver 50% plus at a compound annual rate. That's at the beginning of last year. At the beginning of last year, that number, that 5-year number was 42%. Today it's closer to 20%. But stock by stock, we're looking at that 15%, and the more it falls below, the more profits we will take. So we have such a creative research team, however, and there are so many stocks vying for our attention, and with these IPOs, vying for a position in our portfolios, that when a stock drops below 15%, we know there's something else waiting, knocking at our door, waiting to get in. Are we in a bubble? I do not believe so. And I am very happy that many people are worrying that we're in a bubble. I experienced the late 90s bubble, and yeah, the value investors out there were really worried, and they think they're going to have their day in the sun again because they did so well during the tech and telecom bust. I don't think that's the case now. I think that the seeds for what we're experiencing now were planted back then. Too much capital chased those opportunities too soon. After there were too few opportunities, and the technologies weren't right. The costs were way too high. We're at prime time for those 5 platforms now and those 14 technologies. And we've just begun. And they're going to be very disruptive and maybe destructive to a lot of value spaces. Not everyone, but anyone looking at price to book, watch out for that book. It may disappear because of disruptive innovation. Anyone looking at that high dividend yield, saying, I got to hold on to the stock. Be suspicious of high dividend yields if that company is in harm's way. And I would say there's about 50% of the S&P 500 in harm's way. Why don't we? I think we're in a bubble because if you look at equity flows since the beginning of 2018, and remember, we had a big market in 2017, so you'd have expected flows to really start to gush. What has happened since then is there's been net liquidation. If you just look at ETFs and mutual funds, there's been a liquidation to the tune of $350 billion if you take away share repurchases. Don't count those. And if you look at fixed income, there has been a net inflow of roughly $900 billion. So think about that, a $1.2 trillion gap there. I will not believe we are in a bubble, equities that is, until we see that relationship flip. I believe bonds are in a bubble, and I believe what just happened with GameStop and AMC and American Airlines, Bed Bath & Beyond, all of those, that is exacerbating the bond bubble, because you're bailing those bondholders out so they can put money elsewhere. And so, I find it a really interesting phenomenon. I don't think it'll last. I think it's been a good wake-up call for investors generally to, understand who is doing what and why. And for investors like ARK to say, look, truth will win out. Make sure you're on the right side of change, because there is so much disruption and destruction taking place out there, and it will take place at an accelerated rate during the next 5 to 10 years. So be careful